Welcome to Meet the Press Now. I'm Brian Nobles in Washington as we begin with breaking news on Wall Street after a tumultuous day for markets across the globe. At points today, the Dow was down more than 1,000 points, driven by uncertainty about the health of the U.S. economy. The trading day is about to end with the ringing of the closing bell. You heard it there. And let's take a look at where all three major U.S. indexes closed today, all of them in the red. You can see the Dow down almost 3 points, the NASDAQ down almost 3.5 points, and the S&P falling just short of losing 3% today. The sell-off began overnight with Asian markets getting hammered. Japan's Nikkei index fell 12%. It's the single worst decline since the 1987 crash on Black Monday. The losses then swept through Europe, where stocks fell more than 2%. Meanwhile, market volatility is at its highest level since the early days of the pandemic in 2020. So what's triggered all this anxiety? Well, apparently it's in large part due to Friday's weaker than expected jobs report here in the United States. NBC News senior business correspondent Christine Romans joins me. Also with me is CNBC senior economics reporter Steve Liesman. Christine, let's start with you. Walk us through what happened in the market today, both in the U.S. and around the world.
Yeah, I guess that's a reminder, Ryan, that stocks don't just go straight up. You have seen stock market records again and again and again as the U.S. economy has been just so resilient. And now these first flickers that resilience might be fading a bit and that all of these Fed rate hikes are starting to cool U.S. growth. And the question is the Fed behind the curve? Is the Fed going to be able to thread that needle and start cutting interest rates before, the cooling becomes something more dangerous? So that's the tightrope, to have another metaphor here about what the Fed has to do. They're all really scary tightropes as metaphors, as a matter of fact. But also you talk about what's going on in Japan. This was truly a global event. Last week in Japan, the Japanese central bank raised interest rates, and then you've got a lot of technical things happening with currencies and the Japanese rate moves, and then you've got the jobs report, and it all kind of just snowballed today with people taking a lot of profits. I'll also say, remember, the stock market's up a lot over the past couple of years, so any little reason to take some money off the table, I think people want to do that. So put that into context for us then. Is this just a course correction, or could this be something scarier? Well, the NASDAQ composite is in correction territory. It's down 13% from its record high. So it has already kind of moved pretty decisively here off of its highs. Does it become something worse than that? Time will tell. But certainly there's been so much enthusiasm in these artificial intelligence chip-making stocks. You look at NVIDIA, for example, it has doubled this year. I think it took 5% off today, but doubled. So some of these stocks have done very, very well. And one could argue they were frothy. They were, the valuations in some of these stocks were quite high. So now maybe getting back to a more reasonable level. So how concerned should the average American be? I'm sure everyone might be looking at their 401k today and be a little nervous about what they saw over the last 72 hours. It's always days like this that people are trying to figure out, now, what's the login to my 401k account? And I always say, if you're scrambling to find the login, that's not the day to sell. Those are always the kinds of moves that lose money. They call it market timing, and market timers generally, regular people who try to time the market, always lose. There's something, if you're a boring buy and hold investor, these are the kinds of days that help get things back into more normal perspective and let you buy stocks a little bit cheaper, Ryan. Okay, that's a good way to look at it. Christine, thank you for the optimism, as always. Steve, let's bring you in now. And just help me understand how the U.S. economy could gain 114,000 jobs and then set off a global panic. What happened here?
Well, I think you got to go back a few days at least to the narrative here. The Bank of Japan unexpectedly raised interest rates on Wednesday. That sort of started this whole thing snowballing. And then on Friday, you had the weak jobs report. This morning, we woke up to a 12% really historic sell-off in Japanese stocks. Look, there's this process called the yen carry trade. I don't want to bore you with the details. People borrow in yen at cheap rates from the Bank of Japan. They buy stuff in the U.S. When Bank of Japan raised those rates, those trades start to unwind. The thing you got to know is we don't know how big it is. It has to play. It's a process that has to play out. And so The jobs report was a catalyst. It made people rethink the idea of how strong the economy is. But I don't think it is the reason to panic, so to speak, because the U.S. economy has been relatively strong. It has really surprised for a couple years. As Christine pointed out, the Fed raised rates over a year ago to 5.38, an historic level compared to back to 1980 when we had the stagflation of that period. And we've been living with these higher rates for a year. They're finally starting to bite, and the Fed is looking like it needs to cut interest rates here and probably should have cut interest rates before. So the key here is that there's only been one really bad number when it comes to the U.S. economy. Yes, we are weakening, but I don't think that a recession is imminent relative to just this one number.
Thanks for watching. Stay updated about breaking news and top stories on the NBC News app or follow us on social media.